Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market has been bouncing within a range with buyers active off the 68.5 high volume node. Heading into the open, our short-term bias today is going to be neutral because the market is still technically stuck in a range. And until we get any kind of sustained breakout or a significant breakdown, our short-term bias is going to remain neutral. And that means that we have to continue to be flexible and nimble with our real-time intraday bias. On the upside, we have initial resistance at 74.75 to 76.75, followed by resistance at 79 to 80.5. And in order for the market to break through those areas of resistance, we are going to have to see broad market strength and, more importantly, some sustained upside momentum with the NYSE tick holding above zero and printing some nice upside values. On the downside, we have initial support at 65.75 to 67.75, followed by yesterday's low at 63.25, and then we have support at 60.5 to 62.5, followed by last week's low at 24.57 and an HVN at 56.5. And in order for the market to put in any kind of sustained breakdown below 60.5 to 62.5 and especially 57, we're going to need to see broad market weakness and sustained downside momentum. I think it's also going to be helpful to keep an eye on the Russell. We saw a short-term balance breakdown take place in the Russell yesterday, and continued selling in the Russell could limit the upside in the S&P and drag the S&P lower with it. Now in the Russell, we have some larger time frame support around 1398 to 1400, 1401, followed by the 1391 to 1393 area. So in the event that TF gets exhausted into its own support, and if the S&P at the same time is also testing an area of support, that would be a situation where buyers can be active in both markets, even though the Russell would be displaying a lot of weakness on the day time frame. So if Russell's into support and S&P is testing, let's say 60.5 to 62.5 or the 56.5 to 57 area, then that could still be a time where buyers step into the Russell, and then we also get a bounce in the S&P. So unless we're seeing excess strength or excess weakness on the day time frame, ES can continue to balance within a range. Now balancing within a range means that ES can still go up and test 74.75 to 76.75 and possibly even the 79 to 80.5 area, and it would still be within the recent range. And on the downside, ES can go down and test initial support and even go lower and test 60.5 to 62.5, and it would still be stuck in the recent range. But in order to break out from the recent range, that's where we need to see excess strength or excess weakness. And absent any excess bullishness or excess bearishness on the day time frame, the market can continue to balance within the range established over the last 8 to 10 days. So those are the main ideas heading into the open. Again, let's continue to be nimble and flexible with our intraday bias. Let's see which side is more dominant off the open, and if there is no clarity, then it's better to wait for the market to at least provide good trade location at a key zone rather than stepping in the middle of the range where there's really no edge and you really don't have any key support or resistance to lean on. So those are the main thoughts. Let's see which side is dominant off the open, and we'll take it from there.